Guys, welcome back. Keith at Crypto Bullseye. So we've got lots to talk about today, and I'm bringing you the first ever meme coin trading show. So this is at the request from Jan in our community. So thanks for that, Jan. We'll be covering that. So before we get into that, we've got dominance that we need to consider. Dominance is just putting a new all-time high after that volatile spike with the altcoins that give the altcoins the surge that they needed. Now we need another pullback in dominance before we can start looking at high-risk tokens like meme coins. So guys, trading can be fun. Trading can be life-changing. Trading can make you additional passive income on top of your 9 to 5. You can even remove that 9 to 5 if you do it properly and you do it right. But more importantly, you need to educate yourself to make sure that you've got the rule set, to make sure that you've got the psychology and the willpower to be able to push that forward with structure and emotionless thoughts. So trading and trading meme coins. This is what Jan's requested. So we're going to go through the meme coins. Trading's more risky. Crypto's even more riskier. Meme coins are even more riskier, but you can get bigger moves from meme coins. And this is what we've had from the community over the past few weeks. We've got this big Dogecoin break, and on the back of that, 342% move to the upside. So that's not to be sniffed at, but you need to reassess and you need to reanalyze because we put a top in. Markets are doing this. Markets are going down at the moment, so the markets need a pullback. This is where everyone's frightened. This is where the retail's got in on the pumps. They've got in on the pumps. They've got in on the pumps. Get a little pullback, and their P&L goes into negative. Anyone that's got it on the break, your P&L staying in positive. So that's why we have to be greedy with our entries, guys. That's why we need to look for the killer entries. That's why we need to prepare for those entries. And if those entries don't arise, then we don't take them. It's as simple as that, guys. It's a 24-hour market. Crypto's a 24-hour market. And it needs to be treated like a 24-hour market. There's always opportunities elsewhere. There's tens of thousands of cryptos out there, guys. If you miss one trade, there's another one. So we got that. We got the big Doge move. We've also, in the last few days, had a 43.94% move on Pepe coin. So we got that on the community. We got this break. So there is a lot of money to be made in meme coins, guys, but there's a lot of seriousness behind it as well. I mean, look at this one, PNUT. Within the last few days, PNUT has gone 1,593.09. How can you get into that? How can you get into here? Would you buy here? What happened if it retraced down here? You'd lose half of your capital, more than half of your capital. This done a 61.8% retracement now. You'd lose 61.8% of your capital. How would you feel if you lost 61.8? Because everyone's interested here. This is where the news is. This is where the hype is. Everybody's interested. Everybody's interested. Then it pulls back. What happens? The new retail that have got in here, sell, panic sell, panic sell, panic sell. It'll hit a base, bam, straight up again. All those people that bought here, sold here, are massively in a loss. So things like PNUT, high risk, you need to have patience, you need to wait. You need to wait for them to make a base, start printing some new levels of support, new levels of resistance, and then you've got some. Okay, guys, before we get into the meme coins, before we do the analysis on the meme coins, we need to physically understand what part of the cycle we're in. Last weekend, going into the start of this week, we had parabolic moves to the upside. There was more confirmation. There was more conviction that we were in that new bull run. There's a few things that need to happen now, and we do need to have that cool off with the altcoins. Altcoins are starting to catch up to Bitcoin, and we knew that because we had this pullback in dominance. When we had this pullback in dominance, all the altcoins, meme coins included, were outperforming Bitcoin. And now what's happened is we've had another spike and we've put in a new high on Bitcoin dominance. What does that mean? 60.93% on the Bitcoin dominance. That's Bitcoin is nearly 61% of the whole of the crypto market. That means that people have got a little bit fearful within the last few days. They're flooded back into Bitcoin. So the dominance is going up. The dominance is going up. Bitcoin's outperforming the altcoins within the last few days. That's what these green candles are telling us. And now what we're looking for is a rejection from this trend line on the dominance and a pullback, an even bigger pullback. If we had a rejection here and a bigger pullback here over the next few days, that's going to signal that the alts are going to outperform Bitcoin again. The altcoins are going to highly outperform Bitcoin again. And then we're due for an even bigger leg than what we had at the start of last week. So it's all about preparation, and there's a couple of clues that we can tell from this dominance whether it's going to get rejected. This is the daily candle. What we want to see is a spike up and then a spike back down and a close at the end of the day within this trend line. That's going to give conviction that we're possibly going to get a reaction at this going into tomorrow and the day after, and then start a pullback. If we start the pullback, then you'll start seeing another move in altcoins. So we're looking for chart patterns at the moment, guys. We're looking for bull flags. We're looking for breakouts. And we're looking for things that's going to give conviction that we are going to get control from the bulls again at any point going forward. So you can see that Bitcoin, this is what we're looking at. We're looking at the dominance. We can see that altcoins have pulled back over the last few days, and you can see that Bitcoin has stayed here. So Bitcoin's holding around the 85 or 87 to 89,000 level. So it's holding this level. It's holding its all-time highs. And it hasn't had that big pullback. So that's showing strength in Bitcoin. Showing strength in Bitcoin. We've seen the clues. Bitcoin's holding around 90,000. Dominance has just put in a new high. And then what does USDT tell us? USDT dominance. You can see, guys, this is from the last video. We said we were going to have a volatile move to the downside. When we had a volatile move to the downside on the USDT dominance, that's given an indication that people are selling USDT, going into more risk assets, such as altcoins. And then I said we were likely to hit a base down here to coincide with this previous low. Look what's happened, guys. Exactly, that's what's happened. So what does this mean? We've got a support on USDT dominance. That means that there's a potential bounce from USDT dominance from this level here to go and test this previous support as resistance. We want this to be resistance, but this move here, guys, that's going to mean one thing. That's going to mean more downside for altcoins. Unless we break and close above this level here and make another move to the downside to come and test this support here, expect altcoins to have a further downside. So what does it mean if we've got further downside on altcoins? If we've got more bleeding on altcoins, what does that mean? It means opportunity, guys. Altcoins have pumped too much. Altcoins are overheated. The market's greedy at the moment, and the market needs to cool off. It needs to coil before it can make another big move to the upside. It's all about, in the bull run, guys, putting in those higher lows. So if you've made a 100% move to the upside, and then you make a 50% move to the downside, that 50% is going to make you feel crap. Because you've put in the higher low, you're expecting an extension past the previous 100% and an extension and a continuation. So that's what we're looking for, guys. It's going to feel crap at times when you get those pullbacks, when you get the nasty pullbacks. They're quick as well, and they hurt you. So we need to be looking at these clues in the market. So dominance looks like on USDT that it's got another leg up. During that leg up, we can expect more downside on altcoins. Next thing, guys, we talked about total three. We've been monitoring total three. I said once we've taken out this previous high, it's looking strong for total three. That means we've put in a new higher high, and holding this support level was the key indication that we were going to get that surge. What's happened here, guys? Have a look at this. What's happened here? So there's the previous high on total three. We've come back down where its previous resistance, you'd expect it to act as resistance again. It's acted as resistance until it breaks and closes above this level here, sat at 760 billion. Till it breaks, closes, and holds that as support. That's why I'm not interested, guys. Expect a reaction from total three. Expect a pullback from total three. Until we break and close above, we can't get the conviction that we're going to get another move for the altcoins. When we do get another move for the altcoins, guys, and we do get a break and a close above here, next level is all the way up here. 1.058 trillion. From where price is now, that's an extra 260.355 billion going into just altcoins, excluding Bitcoin and excluding Ethereum. So that's the rest of the crypto market, guys. That'll create a surge in altcoins, but we've got this resistance barrier to overcome. So it's important that we do look at these markets at front running to find out whether something's likely to happen going into tomorrow, going into next week, or when it's likely to happen and how you can prepare yourself. Okay, this is what you're here for, guys. This is the altcoins. Right, we've had the big move on Dogecoin. Congratulations. Anyone that got this break here, congratulations. Pat on the back. Is it a good time to get into Doge now? Definitely not. We need a pullback. So all we can do now is add some fib numbers on there from this swing low to the swing high, and we're waiting for pullback zones. First one, let me just pull this back here, see if we can get a better indication. No, this one. Right, okay. So we're doing it from this swing low here. We're looking for a pullback. There's two key areas that we're looking for when we get this pullback. In a strong trend, we're looking for a 382 pullback. A strong trend, another strong trend, is the 618. It often comes back to the 618. It often comes back to the 618. If it's a really strong trend, guys, expect a reaction at the 382, but 618 is always a good area. So how can you play this? If you were scaling a position in and you're looking from an investment perspective and you're looking for an entry from an investment perspective, you hit the 382, you get a reaction from the 382, small amount of capital at the 382, smaller amount of capital at the 618, and then, of course, stop losses behind. It means that you can preserve your capital. It means that you're not putting all your eggs in one basket here. You can average your position down here at the 618. You've got a higher conviction of holding the 618 because we've put in a higher high. You'd expect to put in a higher low. And that means that you've got an average entry of around here in the middle of the two. And then you've got protections down here. So what does that do from where price is now to where price is at the 618? Where price is now, 43 cents. Price at the 618, 22 cents. What would you rather do? Pay 22 cents or would you rather pay 44 cents? It's no brainer, guys. Black Friday's at the 618. Got Pepe coin. Again, we've done this on Pepe coin. So we're going to be doing exactly the same thing. We're going to measure a swing from its low and we're looking for pullbacks again. We're going to stick some indicators on shortly as well. And let me just get rid of this, tidy this up. So we've had that 43% move to the upside. Anyone that took profits here, pat on the back. Because if you took profits here and we pull back to the 618, what does that do? Firstly, it coincides with one thing. Previous resistance, previous build up of price action, you would expect that to flip support. You've got your 618, you'd expect that to hold support. You've got double complements here, guys. So if we pull back to this level, which is sitting at 0.00001039 on Pepe, that is a discount from where price action is now of 30%. So if you've sold up here and you pull back here and you buy in here, that means that you've cashed that. You've cashed the big move of 45%. You've pulled back and then you're getting it a lot cheaper, 30% cheaper. So be greedy with your entries. Don't be buying pumps. Don't be buying FOMO, guys. Buying FOMO is a recipe for disaster. Trust me. And if you're doing it on meme coins, it's going to hurt you. Okay, we've got Bonk next. Got Bonk. Got the break on Bonk. Bonk's made a move from the break to the upside, 95%, nearly a double. So stick the fibs on. That's what we're going to be doing. I'm going to stick some indicators on here as well, guys, because these indicators can tell you a story. I'll just get rid of the RSI for now. And let's simplify things. We've got one indicator. We've got naked price action. So price action is the key for me. I'm a support and a resistance trader, and price action is the key for me. Price action gives a story of real time. Indicators are lagging. So you use indicators as an additional measure to back up your thesis of what price action is actually doing. Remember, these are lagging, guys. All of these indicators are lagging. Moving averages are lagging. Stochastics lagging. It's calculated by previous price action. Because it's calculated on previous price action, that means it's lagging. But when you look at naked price charts, you look at naked candlesticks, they give you the picture of real time. Who's winning between the bulls and the bears on any session. Whoever wins on the one session gives an indication of who's going to win on the second session, depending on what the candlestick looks like. So we're going to pull back here. We're looking for a pullback. Sticking our retracement on there, and we've got the 382. We've had a reaction from the 382. Look how these things work, guys. We've had a reaction from the 382. We've had a little bounce from the 382. However, I'm expecting to pull back further than this. I'm expecting to pull back again to the 618, which coincides with this previous buildup of price action and this previous resistance. I would expect that to come back and flip support. So 618 is sitting at 0.000261. That's a drop from where price is now of 20.85% cheaper. 25.8% cheaper. Patience is key, guys. Patience. If something like this happened on Bonk, would you feel like you'd missed out? If it just carried on moving to the upside, would you feel like you'd missed out? Because it is going to pull back at some point. So the higher you're getting it, the higher you're getting it on a pump, the more you're going to lose. So remember, guys, there's always a setup somewhere. Right, Mew. I've never done this one before, guys. Mew. Got a double top here. What's the significance of a double top? Means we haven't put in a higher high unless we break that double top. So there's the double top. Come up. We've had a rejection. We've had a lower low. This is what I mean about candlesticks telling a story. We've had a lower low, lower close candle. This candle closed below the extreme low. The extreme low is the wick of the previous candle, indicating that the bears have got control. Once you get that, a lower low, lower close candle, and you're at some kind of a resistance, double top's even more confirmation, then you're expecting the next session, the next day to be bearish. That's what happened. The next day was bearish. So you can get indications and you get clues as what's going to happen going into the next session. I'm on the daily, so I'm looking at what's going to happen going into tomorrow. It's all about probabilities. It's all about clues. We know that the bears have got conviction at this point here. We need that the bulls need to break and close above 0.011757 before we can continue to the upside. So how far are we likely to pull back on this? We are likely to pull back. We're likely to pull back here. Again, guys, look left. Always look left. Clues look left. So 618 is sitting at 0.06891, 0.006891, should I say. Remember, guys, clues look left. 618 coincides with this build of a price action, previous resistance, previous resistance, previous resistance. You would expect to flip support. 618 sitting at 0.007000. Goat next. This one has run. This one's run. Okay, so what have we got? Got here. Let me just get the RSI up, guys. I just got rid of the RSI, but let me just see if there's a divergence on here because there's not much price action that we can go by. So if we can just see if there's any kind of divergence. Yeah, we've got a bearish divergence on here. We've got a bearish divergence. So when you can see here that we've put a high in there, you've come down, you've put in a lower high, you've come down, you've put in a lower high. What's price doing? Price has come down, it's put in a higher low, and it's put in a higher high. So that's a bearish divergence indicating that we're likely to get some kind of a pullback. And this swing here, in comparison to this swing here, is a smaller swing. So it hasn't got as much conviction. It hasn't put as much of a new high as I'd have liked to if it was going to continue. So I'm expecting the pullback on here. Stick a simple trend line, guys. Once you lose this trend line, then price action is expected to reverse even further. But from where price is now, if you are in here and it's coming to the trend line, that's 17.49% to the downside. So how would you feel if you lost an extra 17.49%? Stick a fib on from this swing here. See the 618, guys, this coincides with the actual trend line. So you've got the diagonal trend line here as support. You've got the 618 here as support. If price comes down here, that's double confluence. You'd expect to get a reaction from that. And you're either going to come up, test this 382 as a lower high, and then break trend to the downside, or you're going to take out the previous high and then continuation, new highs. That's how you can play goat, guys. It's looking like it's a bit of indecision at the moment. I think it's going to pull back to this trend line to the 618. That 618 is sitting at 0.65820. Right, Shib. We've got this one as well, guys. 60.48% move to the upside. So got that on the channel. Anybody that's took profits up here, if they pull back now to this support, which is highly likely, that's a 28% move to the downside. So anyone that's sold there and buys back here has bought back 28% more tokens for the same amount of money. So I'm expecting this to pull back even further. This is a strong support. That's a strong support. That strong support goes all the way back here. You can see there's a shelf, fell through, resistance, and then you come back down. You'd expect that to flip support. Support and resistance is the key, guys. It's the first metric that I want to be looking at. You can look at this as well. Your stochastic, as the stochastic's coming down, we want an oversold stochastic. If price action comes down and holds this level here, whilst the stochastic is oversold, that's giving you even higher conviction. So you use these as tools to complement price action, to complement support, to complement resistance. And what happens when you're at a resistance level, stochastic's overbought, that's giving you an indication you need a pullback. This is giving you an indication you need a pullback. This is giving you an indication you need a pullback. Use it in conjunction with price action. It can tell a story, guys. One strong thing that you can do is identify higher highs and higher lows, or identify lower highs and lower lows. Identify what kind of a trend we're in. Let me show you. This is an important thing, guys. Identify what kind of a trend you're in. I go over this time and time again, but for anyone that's new to crypto, you're putting in new highs in a bull market. You're coming back and you're retracing and you're not taking out the previous resistance, you're putting in a new support. Once you've put in a new support, you're doing another thing. You're putting in a new high. You're coming back down. What was previous resistance would come support, and then you're putting in a new high. Previous resistance becomes support. So by doing this, the trend's your friend until the bend at the end. What do I mean by that, guys? The bend at the end, from a psychology perspective, the bend at the end, once you break this, your trend's reversed, you're coming back down, you're retesting, you start making moves to the downside, you start putting the lower highs, the lower lows. And if you're not prepared for that, you'll be riding these all the way down. So bear markets kill people, guys. And there's always bear markets within bull markets. They're a lot shorter, they're a lot quicker, they're a lot faster, and they hurt you a lot more. So use the stochastic with price action is what I'm saying. Right, Whiff. Whiff's holding support at the moment. So we're holding a strong support. You can see one thing. We're at an overbought on the stochastic. We're overbought. One thing that the stochastic can do, guys, is this. Not go all the way down and then have another turn and then have another turn. So the stochastic can do that. It can have another turn and come back up. So we need to monitor whether we're going to get a cross and a downturn. And this, remember, needs to hold if this is coming into oversold. If we get a cross and something like this, similar to here, you can expect to get another move to the upside before we come back and confirm this. So use the indicators, guys. Got Brett next. Looks similar to Whiff, doesn't it? This one's pulled back a little bit deeper. This is going to be our support zone here. Once you break this support zone, expect price to come back and retest this bottom here. So this is going to be our do or die. That's sat between 0.10 cents and 0.11 cents. This is our kill zone. If we break and close below 0.101, expect to come back down and test this previous low. So you can see that the stochastic's overbought at the moment. So unless we get something like this, a hold from here, and then put in a new high, taking out this previous high, sat at 0.13322, then that one doesn't look great for me. It's holding support, guys. It's holding support, but the stochastic's overbought. I want to see what happens with that and how price reacts at this level here. Floki next. See, Floki's looking better. We've got this buffer here on Floki. This previous build-up of resistance, which was once support, and act as resistance. Before we broke through, you could expect this to act as a buffer. So what have we got here? Let's pull this out. You've got a 0.5. You've got a 0.5 Fibonacci retracement from its previous all-time high. We've broken closed above the 0.5. We've got this buffer here, which is sat between 0.00016662 and then at the upper side, 17991. So you've got that as support. You've got the 0.5 as support, and it looks like we're having a reaction from that, and we're holding that. So potentially we could have a bigger move to the upside on Floki. Let's have a look. To be honest with you, Floki's looking good. It's taken out this previous high here. It's nearly taken out this previous high. So this is going to be the next important thing, sat at 0.00200958. If we mark that out here, breaking a close above there is going to be strong. See how we reacted at that? That was resistance. We reacted at that as resistance. Then we got a bearish candle. The bearish candle needs to do one thing. Bearish candle needs to do one thing. What is that, guys? It needs to come back down. It needs to test support to give conviction. It's exactly what it's doing. It's had a reaction from here. So that one's looking a lot more promising, guys. And you've got protections underneath here. So the protection's at 0.00015954. And that is a move from where this support zone is of 11% to the downside. So that's your protection, is 11% to the downside. Okay, Popcat. Remember, guys, double top, lower low, lower close candle. Telling a story. There's the double top. Haven't quite had that lower low, lower close candle yet, guys. Let's talk about these candlesticks here. What story is these candlesticks telling us here? So first and foremost, we've had a reaction and then we've had a pullback. We know that that's likely to act as resistance going forward, and that's the level that we need to overcome. So what did we have? Indecision. That's an indecision candle. Then we had a lower low, lower close candle. That closed below the extreme low of the previous candle. This is the daily, so we're going into the next day expecting bearish moves. What did we get next? We had an extreme high up here, guys, which tested the open of the previous candle, but then the bears pushed it price down. And then we had another lower low, lower close candle. The close of the candle finished below the close of the previous candle, indicating another red day going forward. Now, this red candle didn't break and it didn't close below the extreme low of the previous candle, causing more indecision going into the next session. Then there was a fight between the bulls and the bears because the bulls thought they had a turn here because of that indecision. Then what happened? The bears have ultimately got conviction because we're in a downtrend. The bears won the day, lower low, lower close candle. Then what happened, guys? Getting some kind of reversal. We've got this wick that's pushed price action up. We've had a little bit of a green candle here, indecision. And then this is a 3-bar reversal, guys. You've got a lower low, lower close candle. You've got an indecision candle in the middle. And then you've got a big engulfing green candle. That's a 3-bar reversal, and that's a strong bullish move. Then there was indecision before we went back and ultimately tested this previous high and rejected from it. Now, this is why it's different on this one compared to the previous one, because look at this candle here, guys. It's a red candle. It's a bearish candle. It's red. It closed below the open of the it closed below the open of the day. So it's a red candle. Is that bullish or is that bearish? It's a bearish candle. However, that's the most bullish bearish candle that you can actually positively get. So we've had a big candle to the upside, and the bulls the bears at some point have pushed price action all the way down here. And then the bulls have regained momentum and pushed price action all the way back to the top. So although that was an extreme, although that was a bearish candle, get my words out, although that was a bearish candle, it was actually bullish because the bulls had managed to push price right near the open. Then we were finished, and then we were followed by this bearish candle here, which hasn't closed below the extreme low of the previous candle. So that's showing going in tomorrow, guys, there's a high probability that we're going to get a bullish candle on this. Looking at previous price action, there's a high probability. If Popcat holds this support today, that we're likely to get a bullish candle going into tomorrow. Right, and the last one, guys, PNUT. How can you get into PNUT? Definitely can't get into PNUT now. So retracement from its all-time low to its high. We're looking for one thing. We're looking for 618s. We're looking for 382s. If I was putting an allocation of this now, if I had, say, just for an example, $1,000 to put in a portfolio, and I decided that I was going to put $50 into something like PNUT, got $50 I'm going to put in PNUT. Would I be putting the $50 in here? No, I wouldn't. I'd be waiting for two things. I'd be waiting for a 382 pullback. And if PNUT's as strong as people think it is, you're going to get a reaction from the 382. So if I had $1,000 and I was allocating $50 to PNUT, I'd be allocating $25 here, and I'd be allocating $25 at the 618. That means the average is here, 0.75. If you put all your eggs in one basket here, your average would be 0.95. So scaling in with a small allocation of your capital, not putting too much risk on these high-risk meme coins, and then ensuring that you have patience to wait for those strong levels. It's going to give you a high probability of doing well in this bull cycle, guys. So price to pull back here, price to pull back here, and then hold at this level. It's the only thing you can do. We've got limited price action on this. Don't be FOMOing in, don't be FOMOing in, don't be FOMOing in, because when that happens, you get caught out down here and you lose a hell of a lot of your capital. Your P&L just goes like that, when in a bull market, your P&L should be going like that. So just be careful with these guys. Right, okay, I've had a request to do Gala games, so I'll be doing a Gala games video later today. Get yourself in the Discord group, guys. If you want the community picks, get yourself in the Discord group. I'm getting so many community picks at the moment. It's hard to keep up, but I'm trying my best. So make sure that you do subscribe to my channel. Join our Discord group, and I'll see you guys in the next one.